Hello, welcome back to Ticker Talk. Hope you're finding the series helpful. For today's episode, we are talking about a mid-cap company that did $530 million in revenue last year. It signed $46 billion in deals. That's not a typo. The contracts they've already won are 87 times bigger than the entire revenue of the business that's supposed to deliver them. The CEO renounced his Russian citizenship 2 months ago. NVIDIA wrote them a $2 billion check in March. Meta committed up to $27 billion. Microsoft up to $19. The stock is Nebius, ticker NBIS, and depending on who you ask, it's either the most underpriced AI infrastructure play on the market or a capital-intensive death trap held up by 2 customers. I went into this expecting another AI hype name. I came out of it less sure than I thought I'd be. Let's go. Nebius runs an AI cloud. Think of the big AI labs: OpenAI, Meta, Anthropic. To train and run their models, they need warehouses full of GPUs. Most rent that capacity instead of building it themselves. Nebius is one of the companies they rent from. Same lane as CoreWeave. The pitch is full stack. They don't just lease bare GPUs by the hour. They run the data centers, the networking, the software layer that makes it actually usable. You sign a multi-year deal, they deliver the compute, you train your model. The backstory is the unusual part. Nebius is what's left of Yandex, the company that was basically the Google of Russia. After 2022, the Western pieces split off, became Nebius, and listed on NASDAQ in late 2024. The founder, Arkady Volozh, runs it from outside Russia and renounced his citizenship in February. So the bones are Russian. The business today is not. The numbers: Q4 last year, $228 million in revenue, up 547% year on year. The core AI cloud piece grew 830%. Annual run rate exiting 2025, $1.2 billion. Management is guiding $7 to $9 billion ARR by the end of this year. Backlog of contracted revenue, around $46 billion. Market cap, roughly $37 billion. Enterprise value to revenue, 63 times. PE, 366. So no, it's not cheap on any normal metric. Capacity today, 170 megawatts of live data center power. Target by year end, 800 megawatts to 1 gigawatt. NVIDIA partnership says 5 gigawatts deployed by 2030. CapEx, about $5 billion in 2025, heading higher. Bull case. 3 things make this interesting. 1, the backlog. $46 billion in signed contracts against $530 million in revenue. That's not a forecast. That's signed paper. The visibility is real. 2, NVIDIA didn't just partner with them. NVIDIA invested $2 billion and is letting them be one of the first to deploy the next-gen Vera Rubin chips. When the company that makes the chips picks you, that's a moat signal. 3, full stack matters. CoreWeave rents GPUs. Nebius sells a platform. Platforms keep customers longer and earn higher margins. The Q4 EBITDA margin hit 24%. Guidance for this year is 40%. If they hit even half the ARR target, the multiple takes care of itself. Bear case 3. Things should worry you. 1, customer concentration. Meta and Microsoft are most of that $46 billion backlog. Lose one or watch one renegotiate and the model cracks. 2, capital intensity. They spent $5 billion last year. They'll spend more this year. They're funding it with debt, asset-backed financing, and almost certainly more share issuance. Today's shareholders get diluted to pay for tomorrow's revenue. 3, the hyperscalers can build their own. Meta is signing $27 billion deals with Nebius right now, and also building its own data centers at the same time. Today's biggest customer is tomorrow's competitor. The CapEx is real. The customers can walk. The valuation has no margin for error. Here's where I land. This is not a meme. The contracts are real. The partnerships are real. The cloud is real. But it's also not a set-and-forget compounder. It's a binary execution bet. If they hit their megawatt deployment targets and convert the backlog, the stock works. If they slip on either, the multiple gets cut in half on the next earnings call. I'm watching, not buying yet. Signal to watch, quarterly megawatts deployed. If they don't hit 400 to 500 by mid-year, the $7 to $9 billion ARR target is in trouble. Signal to exit. Any sign of a Meta or Microsoft contract renegotiation. With concentration this high, one wobble breaks the story. That's NBIS. Real business, real risks, and one that I'm going to monitor closely for a speculative buy. Not financial advice. Do your own research. If you found this useful, like and subscribe. New stock every week, 5 minutes. No jargon. See you next episode.